In this video, we're going to take a look at our portfolio of trade recommendations. We're going to come in here to the Charts tab. We got quite a list in here. You can see that we've got a number that we've put in. We've got some orders on some of these that are playing out for us. We've got some nice big winners like Grow Generation. This is the marijuana stock that we picked up after out of the 5 states that voted for legalization of recreational weed, 2 did, and so that's kind of picked up this Grow Generations, and that's our biggest winner right here at this point, $12.95. Now the question is, how high is this going to go? We've got this peak that it broke, and we got a lower high today. It looks like it might be getting ready to pull back, so there might be some opportunity to come in here and take some profits if we wanted to, but we picked up a 428-day option on this one, so we're actually anticipating long growth on this. So even though this may pull back against us, we're not going to get out at this point. We're going to hold on to this one for a long-term trade. And we may end up, if it drops back down and rallies again, we may end up picking up a second one. That's why we started with just one. Actually, we've got 10, but they're small. So $2,000 worth of an investment into this market. So if it pulls back, we'll probably just wait for it to rally, make a 1, 2, 3 formation, and go back up again. And we're just in this one for the long run, looking for a big retracement on this market. So a pullback just gives us an opportunity to put on some more positions. Let's go all the way back up to the top and look at Apple. Apple started to rally a little bit today. We got into this market on the initial break down here on this double bottom, as you can see, and I am anticipating a continuation of the uptrend in Apple. So we've got some upside potential. It pulled back a little bit, give us that little ABC pattern, and so now we're seeing that come in here, and we're just going to anticipate a testing of this previous high and then a continuation. Again, we bought a short time frame option on this one, 64 days, so we got about 30 days before we have to decide what we're going to do with this one. We can always do a rollover and buy more time if we need to, but at this point we're just kind of looking for this to test this previous high up in here, and then of course if it breaks that, we've got several more target points up in this region here. So we're just looking for a rebound on Apple off of this bottom formation. At this point it's looking very much like a head and shoulders formation. So let's go ahead and drop that in there for you. So we got this left shoulder here. This is the neckline. This would be the head down in here. This would be the other neckline. And then, of course, this right shoulder down in here. Now, that right shoulder down in there does represent the fact that there could be a possible, after today's rally, it could fall and drop again and come down and collect this right shoulder before it turns and rallies once again. We don't know obviously what that's going to do, but this is the anticipation. So it could break here off this pullback and start to rally. I mean, it's got a good rally today, and then a continuation of the uptrend. But nonetheless, this is what we're looking for on Apple. We come down to Amazon. Amazon we're in, and this had a little bit of a disappointing run, but it's kind of, par for the course. It's what we're kind of anticipate with this 3 drive pattern. We got the nice little Elliott wave in here. If this is the bottom, or the Wyckoff spring down there at the bottom, that would we would really expect an ABC pattern in here, right? Markets don't always go straight up and down. They go through these little wave patterns, and so don't get freaked out on this one. We do have a little bit of a drawdown, but we got this little pullback coming in, and then the possibility of a continuation of the uptrend. So that's what we're going to look for on this one on Amazon. If we come into American Express, now this one is a disappointment. So I was concerned about this one, and if you remember the conversation we had with this one, we had a 3 drive pattern in here, which brings us up into being a C1 right here, and that would be a little ABC pattern, right? So the ABC pattern would bring us in with a small topping formation in here, and maybe back into the 100%, 130.9. So we run the Fibonacci ruler off of there, and that would bring us back down into this area here. So we have the possibility this market could make a little rebound and pull back into the Fibonacci sweet spot down in this region here before it turns and starts to rally once again off that. I look for it to go to that 50% level and then rally once again. If it does that, we'll be looking to pick up another option in this region here. So we'd be dollar cost averaging in. Now again, we've only got 64 days on this one, so we don't have a lot of time. But the thing is that I was looking for on this is that this is a small, if we come in with our Elliott wave tool, a fractal Elliott wave. So a little fractal Elliott wave in here like this, right? And that's what we would get. But then with the overall longer term Elliott wave, this would be the longer drive. So 1, 2, 3, and then up into here. So if that's the case, that's what we'd be looking for. That means we're going to have a little bit of a pullback in here. This is just a fractal drive and an opportunity to put on a second position at a lower price. So we got into this one just in case it wanted to take off and rally and really explode out of here, which it didn't do. It's now pulling back. So now we're going to have to look for a dollar cost average entry down in here. All right, so then Salesforce is the same thing. We've kind of got this little head and shoulders formation coming in here. So we're coming in with that right shoulder in there, and that right shoulder's right down in here. So we need to see this thing turn around, or we're going to, maybe we may have to liquidate and take our lumps on this one. But I am looking for it to make that right shoulder and then rally once again. So if that's the case, if it comes down here, we may again have an opportunity to dollar cost average, put a second one on, and look for this market to rally at that point. Cisco made a nice, beautiful break for us here. This is what we were looking for. This is that nice little shelf in here that we kind of like, this little triangle wedge formation, little pattern, and it broke out the top strongly. And we are anticipating this market coming back out here. We've got this peak right in here that it's testing, but the next high one is up in here. And then, of course, we look back to the $56.94 region back in there. So there is some upside potential on Cisco. Again, we've only got a 64-day option on this one, so we may have to buy some more time. But we've got about 30 days before that has to be a decision made. Now, we got Chevron. Chevron we don't have a position on because we just had it on our watch list. The problem with Chevron is it's gone up so big. It came up here and it broke this high, but then it couldn't push up much higher past it. It's sitting right here at this previous high right now. So the question is, are we going to get a retracement back on this thing all the way back down into the Fibonacci sweet spot somewhere down in here before we start looking to buy once again? So we've just got our eye on this one. If it comes down, breaks the blue lights, oftentimes what we'll see with these strong markets, especially with the energy industry having the struggles that they are and the prices going back up, we may see this thing come down, break these blue lights, and not make it all the way back down to the Fibonacci sweet spot, maybe bounce off 38.2 or even just turn right in here and start to go back up again. The problem with that is that would be an indication that there could be a little bit of sideways action going in here and not really an explosive growth opportunity with options. So that's why this is just on our watch list, not really anxious to jump into this market right now. If we come into Disney, we got the same thing happening down here. We had Disney on our watch list, but this is a 3-drive pattern, as we can see coming off the Elliott Wave top formation. We got drive 1, got drive 2, and this is drive 3 coming in here. Now the question is this going to be the Wyckoff spring? Or are we going to get this bounce off of this little point right here and then a rally and a turn and go and break those blue lights? So we're going to watch. If it breaks the blue lights in there, that'll be an opportunity for us to start looking to take a long position. Again, remember, when it does that, we'll get an ABC pattern in here, so it may make that first rally a pullback in the second rally and start to run at that point. But if we can get in down here low, we can kind of ride through that, or we can take our profits on the ABC or stay through that one and take the opportunity to put on a second position for the next rally. So that's kind of what we're looking for on Disney. If we come into growth generation, we talked about that one. Home Depot, a little bit disappointed right here on Home Depot. We've got the nice little 3-drive pattern in here already, and so we did buy kind of high on this one. It's difficult to buy high and expect it to go higher. Buy high and sell higher is a tough strategy. I like to buy low and sell high, but in this case we got the peak up in here that we were looking for this thing to go up and test, and so there's still the possibility that this thing could go through this little this little flag formation in here, and then look for this market to rally and take off and come up and test this previous high. So that's what we're looking for. I don't want to see it fall, obviously. That would not be good for us. We do want to see this thing break higher. If it falls and breaks out the bottom of that pattern, and this would probably be my trigger point right in here across this low right here. If it breaks that little flag formation, that little pennant formation to the downside, we'll probably just liquidate that one, take our lumps on that one. So we got Intel in here. Intel, it's a slow growth thing. It's not been really an explosive stock. So doing this with an option might have been a bigger risk-taking venture than what we needed to get into. So we are getting the little ABC patterns in here, though, A, B, C, and it's pulling back, and we're looking for the next ABC wave right in here, right? So we should get a little bit of a rally once we can get it to come up and test some of these previous highs up in here. That's our ultimate goal, get it up into this region here. The problem is it's just been so so weak. It's not a real strong stock. So we might want to do this one with some shares. But right now we're sitting here with a little option in there with only 64 days to go. Johnson & Johnson, the reason I've got this one in here is because we got our first drive up here off of this nice Elliott Wave pattern. You can see we got the 3 drives down. We got drive 1, drive 2, and then this is a real ugly drive 3, but nonetheless made kind of a real ugly little head and shoulders pattern in here. And we got the break above the head neckline. It came back down. Very common for it to come down, retest that neckline, which is exactly what it did right there. This is just an ugly market. Very difficult to trade. But nonetheless, we are getting that break right here on this new B1. So this is the B1 right in here. And that's what we're coming in with. And if we pick up an option on this one, the thing about this is that we're going to have to be very patient, because this market has a lot of sideways and then a burst, and then sideways and burst. So Johnson & Johnson, if we come in here and look out of around 64 days on this option, let's see what we can buy a call for at the money, and they're about $467. So let's go ahead and buy one of those. Let's see, we're just going to buy one, so we'll go into the single, and we'll just buy one at the money, and let's go ahead and we'll just market order into that one. And so we're going to put in an option in here. Again, it's $475, 64 days until expiration, anticipating that this B1 is going to pay off for us, and that's going to be a break higher. So that's a B1 right in there. Okay, so let's go back in. We're going to look at Coca-Cola. Coca-Cola isn't breaking that that rally like we had hoped. It's a little bit weak in here. As that's coming in there, you can see that's why we got into that one, is breaking the blue lights. It's pulling back against us now, but it may just be pulling back, taking out some stops before it rallies once again. And so that's what we're looking for. We've got these peaks up in here that we're going to look for it to test. Got a couple more back in here, but 67.20 is our ultimate goal, to see this thing come up here and rally off this 1, 2, 3 bottom formation. So we got 1, 2, 3. Got the little ABC in there, and we'll anticipate a next rally up on that one. So we've got McDonald's in here. McDonald's, the reason this is on the watch list, because, well, McDonald's is a great company, and so what we want to do is we want to see this thing make this next drive high, right? So this is the pullback. We broke the blue lights. This would be our drive 1 up here. We get the break, and so that would make this right in here. That would make this an A1, and that would make this a B1. So we're looking for this market to break this B1 lights, and so that would be our first natural trend line. We got our mathematical trend line, then we got our horizontal line, and we want to be in the market before the horizontal line, because oftentimes that doesn't go much higher. So and technically speaking, I would say we already broke this natural trend line that would come down here, higher highs and higher lows. So we've actually done that right there. We do have a little tiny test here of that previous high, so it would be nice to see an opportunity to see this thing go higher. Let's come in here and price out an option on this, and let's go 64 days on this one, and you can see that the option is about $1,000. So let's go ahead and put an option on that one. Do we want to go higher? That's $500 up there, $1,000 down here. That's a delta of 59. If we go up here, it's a delta of 41. Boy, it'd be nice to be able to get something in between there, but we can't. We have to choose one or the other. I'm going to go with the little bit higher one, give us a little bit more, a higher delta for the rally. We could come in here and we'll just put one of these on here into McDonald's in anticipation of a break of those blue lights and a continuation of the uptrend. Doesn't mean it has to. I mean, this could be a little ABC on the downside, so we're being a little bit cautious on this thing, but it could come down and retrace and give us that 50% retracement back into the Fibonacci sweet spot. But at this point, I really am a little bit more bullish on this market, anticipating a rise in price, so we'll give that a shot at that one. The next one is Meta. We're going to come in here. Meta, as we talked about, we were a little bit worried about putting anything on Meta just because it's been struggling so hard and it's just been going down, 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 down. But we do want to recognize the fact that that's a drive 1, drive 2, drive 3. These little shelves in here you can see come in, drop, drop, and then that ends up being a Wyckoff spring. It's the bottom of the third drive, the low point of the third drive. It's a Wyckoff spring. It is what it is. And so this started to rally. It broke the blue lights. We're going to anticipate a continuation of the uptrend. This is a rally, a pullback, and then we look for it to come down. We don't want to see it break those blue lights. If it breaks those blue lights, we may just want to kick this one out, take our lumps on that one, and get out of this thing. But we are looking for it to come, and as long as it stays above those blue lights, we'll stay in and anticipate a rise in price off that third drive with that Wyckoff spring. The next one I want to look at is 3M. 3M is dropping down, breaking those blue lights. Listen, I don't even know why in the heck we got into this thing. Why? That was a bad... Whoever got in that market right there needs their head examined. That was... What in the heck were you thinking, Land? That was not even a wise move. We got... This is an A1. That's an A2 right there. And there's our A3. You got in a new position at an A3. What in the heck were you thinking? I don't know what I was thinking. And not even got my brain on straight. So there's our 50% retracement right there. And so this thing's coming back down. We're going to break the blue lights, possibly, potentially come back down into that Fibonacci sweet spot. And we're going to have to dollar cost average into this one and buy another one down in here. As soon as we get it may rally and go back up. We can get another one in. If we do that, I'm probably not going to put another one in. I need it to come back farther to dollar cost average in. Not any advantage of putting a second one in here if it just turns and starts to go at this point. It'd be nice if it'd turn and start to go to that point, but it would be even nicer if it'd come down, touch that 50-60% region, somewhere down in here. Then we could dollar cost average in with a second one here on 3M, get our second position on, and then rally up out of there. But I don't know what the heck I was thinking buying on a look at that. I was brain dead that day. That's an A1. That's an A2. That's an A3. Why in the heck did I buy on an A3? I don't know what the heck I was thinking. All right, let's come in here, mark. Again, this is A1. This is A2. So this is a breaking of the blue lights right in here. So that would be a B1 right there. So then we couldn't get mad at ourselves for making that decision. So that's a B1. That's why we're looking at this one. So now we can come in here, and now we've got our head on straight. We can look at this one and price these out. We can see that this one's $487 for 64 days out. Let's just go ahead and buy one of those. Again, we're not right at the money. We're going to be 62, a little bit in the money, a little bit out of the money is 41. So we're going to have to go with the 62 in the money, and we're going to go just mark it into that thing. There we go. We got $495 on Merck. Looking for it to break that B1 and continue higher. Let's come in the next one here. We got Microsoft. We're in Microsoft again. This 3-drive pattern coming down here. We got drive 1, drive 2. Got real ugly in here at this little drive 3 and a lot of confusion. So it ends up being, this is the Wyckoff spring. This ends up being the little head and shoulders in here. Not too pretty off of here. That's our right shoulder and that neckline coming in there. So we're looking for the rally off of that bottom in here. And look for Microsoft to continue higher. We got our position in there. It's starting to rally in our favor, so we're okay. If it does come back, Fibonacci ruler in here, back into that Fibonacci sweet spot down in here, we may have to dollar cost average our second position in down in there. We don't want it to break those blue lights to the downside until it goes up and gives us a break up higher and test some of these Fibonacci bow ties up in here. So we do have some target points up in here that we can shoot for. So those are some of our growth potential on Microsoft on the initial setup. Problem is it's not being explosive in here for us, and really when you trade options you need kind of some explosive growth. The next thing we got is we got Nike. Nike had a little bit of an explosive shot out of there as it broke above that previous high. We got into that one. That was a nice move for us. Got up around $400. So you can see that position in here, just to show you, that's about a 54% gain in about 5 days there. So that's a pretty good return on our investment. The thing is, do we want more? We want more, so we're not going to take this off the table. So we're going to anticipate that this thing's going to make a little ABC pattern in here. So A, B, C, and we'll look for it to go up and test these previous highs. This is be our ultimate goal up in here. See if we can't get it up into this region here. We got a couple more up in higher. We'd have to buy some more time probably to get up into those higher regions, but nonetheless, this is what we're looking for here on Nike. If we go into ProShares Ultra Short Bloomberg SCO, this is crude oil. All right, so I just want to bring that to your attention. Take a look at crude oil. The thing about crude oil is we got drive 1 on the way down right now off this peak. So this comes in with the nice little shelf, right, coming in here. We got the break of the shelf, the rally back up. Broke the blue lights, so this would be drive 2 coming down here and breaking that drive. Makes you want to say that this thing has a reversal point at this point. but there's also the downside potential for that third drive, and that's what we're going to look for. We're not going to get long on this thing until we get an ABC bottom formation, a little head and shoulders. You could say that this is a head and shoulders right here, which would give us this right shoulder, and if that's the case, we would see crude oil start to rally in this region here. But nonetheless, I just wanted to bring this to your attention for some of these other stocks that we're looking at, like Chevron, that crude oil started to rally once again. It's not a buy right now because it's just kind of an ugly situation right now. We're looking for this third drive down, or it's got to make an ABC bottom formation off of this bottom here, this head and shoulders formation, stay above, and then start to rally once again and break this previous high. So kind of an ugly little pattern in there, nothing really to trade, but I wanted to bring it to your attention because of some of the other stocks. So we've got Travelers Company in here. Travelers taken off as this market really come up out of the bottom of this trend. It didn't even give us a full 3 drive down on this one here. We got just a 2 drive down. We got drive down here, which gave us that little ABC pattern. Came down, hit 130.9, which is our golden ratio on the projection level, as you can see. Turned and started to rally once again. It broke the B1S and then never did look back. It just kind of shot right up, broke above the previous high, and that was our indication this market was going to take off and go. And then it just kept breaking highs here, broke another high here, broke another high here, and now we're up here with the topping formation coming in, breaking those blue lights. So now we're looking for this market. It's made its pullback. Now oftentimes we get a little ABC top right in here, right? ABC, and then it turns, and that's where it goes and takes off from this location here, and then we go into that second drive, and that's what we would look for. So this has been such a big long A drive. I'm not sure if the B drive is going to be quite that long, but it should come up and at least maybe test some of these previous highs back in here. And if it does that, you can see it's about, it's kind of right there right now. And the accumulation distribution, this is a tough one to want to get into right now. It's a difficult decision to say, let's get into this thing. But it is a B1, and we love B1s. So we can do this one. We can come in and we'll just price out a 64-day option on this thing. They're going to be relatively expensive because this is $182 a share. So as you can see, it's $600. So let's go ahead and buy one of these. If we go, that one's a little bit out of the money. We go in the money, it's $875. That's not a big 6 to 8, couple $100 to get a higher delta. Let's go ahead and take that. We'll put one of those on. We're going to watch it carefully. I don't want to take a big risk on it because technically speaking, this thing could come all the way back down to the 50% level. And we haven't got a lot of time on this thing, only 64 days. So if it came back down, stayed below those blue lights, came back down into this region, we'd have to be buyers down in here for a second one, and we'd be having to buy some more time on that one too to probably get this thing back into profitable territory as we look for it to come up out of there. So we're looking a little bit early on this one, but we'll see. We may have to put a second one on down here. Let's go into United Health Group. United's come in with this big long, you can see it's just a big long rally here. That's a 3 drive pattern. We got a 3 drive pattern back down, and now we're looking for that 3 drive pattern back up. So this is let's count these real quick. You can see this is drive 1, drive 2, drive 3. We got drive 1, drive 2, drive 3. We got drive 1, and this is the counter trend. Now this thing's come way back further than it should have, and that's good and bad. I mean, it came clear back down. If we turn on the 70 fib line, 78.6, you can see it came right back to 78.6 before it started to rally once again. Of course, we're sitting right dead center of the Fibonacci sweet spot now with a rally bar. So we are now anticipating this thing continuing higher, and I want to see it come up and test this 100% level on that Fibonacci projection. I want to see it come up and break that previous high up in here. And so that would be our initial goal here. And then, of course, we have a 100% projection here off of this major move up in here. So that'd be kind of what we're looking for now. So let's come in and we'll price out one of these at $64. Now, those are $2,205, but you can see that for only 64 days, but this is a pretty expensive stock. It's a $519 per share stock. So you have to decide if this is a little outside your bound for your portfolio. But let's go ahead and put one of these on. And we'll just take this one here. We'll go ahead and place the order, and we'll put a long position on with United Healthcare, anticipating another rally on this market. So let's go in here. We're going to go back over to our charts. We got a couple more. So there's Walmart. Walmart's come in. Walmart's done a nice retracement. You can see we just continually get uptrends on Walmart up. So we got to drive up, And we come on, this was a long distance, but that was going into the elections, not knowing what was going to happen. And then, of course, we got a nice drive up into here. We broke this previous high, so that's kind of a nice shelf that's gone up in there. And so this, I'm going to call this a new reset up in here. So I'm going to call that a new A1. That's going to be a B1. So this right here, breaking above, is going to be a B2. So it has had a little bit of a growth in there. So, you know, there's a possibility that we could see this thing come up and test this previous high. And so we could come in and let's put in here just a 64-day option, just a quick one. Let's price one out, $455. So we're going to go ahead and we're going to place one of these in here just to see if we can't get another little explosion out of here and test that previous high and take a little profit out of here, a little quick scalp with an option. All right, guys, and that's just our quick rundown of some stocks that I've got on my watch list and in my portfolio for the classroom environment. And if you would like to come and join us, we're teaching a new options class here at Utah Tech University, and we'd love to have you come and join us in class, in person. So come and check it all out.